Let's take a look at some information and charts on Synthetix for BraveNewCoin. So the Synthetix is, in my eyes, a lending and borrowing protocol. They call it a derivatives liquidity protocol. Has a staking component, a governance component, and ultimately the issue with Synthetix versus Comp Ave Maker or any other lending and borrowing protocol is that in order to mint the synthetic assets, you need to use SNX, the token. So because of the single underlying collateral, if SNX drops in value, you need to supply more SNX to keep your collateralization level up. If you do not, you get margin called effectively. And this can have waterfall cascade effects in times of bear market stuff. I don't know if they've talked about this or if it's in the works, but my guess is eventually they will switch to multi-collateral approach. We saw the same issues with Maker in the psi stability or DAI, whatever it is now, initially when ETH was the single collateral underlying. So that's my giant initial caveat as far as what's going on for the future of SNX, because I think that'll continue to be a problem. But the good news is you can mint virtually anything you want, whether or not it's on the up and up in the regulatory scale. I'm not so sure, depending on your region, my region, whatever. But you can mint Forex crypto stuff, and you at one time were able to mint equities and commodities. I don't know if they just got rid of that or disabled it, but that was also a heavy regulatory problem, let's just say. So maybe they're cleaning up their act. Maybe they're getting a regulatory blessing. I don't know. Until we see some broad regulatory clarity, I don't think we're going to see a massive cleanup across the board, because if Synthetix isn't doing it, that means somebody else is just going to do it anyway, right? But the big crypto synths are BTC, ETH, and Link. They see a lot of activity there. And the stats are pretty bearish, not going to lie. User numbers are down, volumes are down, active addresses down. This is trading volume. Just continues to decline, not good. Quenta, I think, is an exchange. I was supposed to look that up, but they look like they have most of the volume. And number of trades. This is not bullish for something that has single collateral capabilities. Now you could argue maybe this is going layer 2, some of this flow or volume, but this just looks flat for the most part on layer 2 as well. So it currently looks like there's a lot of ETH short interest relative to everything else. It's mostly ETH and BTC. Everything else is kind of very insignificant percentage here. They do have a staking component, like I mentioned. I think the UI is kind of atrocious, but that's just my opinion. In general, though, it works like any other ETH dApp where you can connect a wallet and off you go in a couple clicks. If you look at the staking stats, according to stakingrewards.com, the participating percentage is near 50%, and the adjusted reward has to be wrong, I assume. I assume it's not negative 22%, but you can lend it at 6%. And for some reason, SNX lending is usually in the 2 digits. 10 to, I've seen even 18% on Yearn Ave Comp. I don't think there's a lot of float or a lot of people willing to hold SNX for volatility risk. Those are just possibilities as to why the lending rate is always so astronomical. Because if you're holding SNX, you're probably using it for synthetic assets themselves. I'm not really sure on that one. They do have a governance component. I say this for every DeFi governance component. It's not going to move the needle unless there's some big issue, something going on, some proposal that divides the community. So not too much happening on that front for most of DeFi. If you look at the TVL for SNX on DeFi Llama, TVL across the board though, all-time highs. SNX is somewhere down here. Where is it? Here it is. 1.79 billion. So 23rd. And that's across everything that's tracked on DeFi Llama across tons of chains here. So in the grand scheme of things, not a terrible TVL, definitely. TVL is kind of a flavor of the week, flavor of the month, confidence game, trust game. Where can you get the most bang for your buck? That sort of thing. Where can you min-max your dollar? Clearly people love Curve. I think Curve is going to perpetually have one of the highest TVLs because you can send stablecoins there with zero volatility risk and collect interest, whereas something like SNX, you're exposed to that volatility, like I already said. If you look at the TVL over time, also declining. This is not a bullish thing. Any one of these that I mentioned in the video isn't necessarily going to move price, but everything collectively is telling you death by 1,000 cuts sort of thing for price. So it doesn't help price, right? I'm a technical guy. I prefer looking at technicals. And when technicals match my fundamental understanding of what's going on, then usually there's pretty strong evidence for bullish or bearish continuation. In this case, bearish, but gross TVL down and flat since earlier in the year. Contract interactions and users also down. They've only just started tracking this, it looks like, but it's down and flat on ETH. They also have Optimism, layer 2 stuff. They just started tracking this as well, flat and down. No real super growth or anything like that, but there isn't a lot of data there to even look at or analyze. If we look at transaction counts, I mean, this echoes everything else that we're looking at here. Transaction counts just way down. Average transaction values basically follow ETH price and transaction counts. So if ETH price is high or ETH transaction fees are high, transaction counts are low, average transaction value should increase because you're seeing less small transactions, fewer microtransactions. Not bullish or bearish, just interesting to look at. I mean, and this is probably the most bearish thing, to see active addresses just pyramid like this, straight up, straight down over the past few months. Certainly not great. And I think a lot of DeFi is definitely boiling down to a zero-sum game where if Curve is the best show in town, then it's going to suck all the liquidity out of DeFi, or a majority of it, even with competitive APYs on Curve. So I think that definitely hurts SNX as well. This is just on chain stats, but unlike most of DeFi, because SNX is single collateral, I think you can look at active addresses and transaction counts and get a really good idea of what's going on fundamentally here. And it looks like there's just fewer users than there was earlier in the year. It's certainly not bullish. NVT just kind of flat, meaningless to me, just all over the place. No real signal there. And MVRV, a measure of market cap versus realized cap, also no real signal here. Most of DeFi has a pretty messy signal with MVRV to noise ratio, and usually what you see for the coins that are acting more like currencies is peaks in MVRV represent peaks in price. For DeFi, that definitely hasn't been the case. So I either think we need more data to figure out if there's a signal here, or there just won't ever be a signal on MVRV for DeFi stuff. Looking at SNX or Synthetix, more specifically on Google Trends worldwide, it echoes transaction counts, contract calls, active addresses. It's just been down since the beginning of the year. Moving on to technicals, starting with the 1 year MA in the green and the multiplier in the red. This works usually pretty cleanly across everything as an oscillator, in that green is buy zone, red is sell zone. For SNX specifically, it's been extremely useful at picking lows and highs on backtesting, especially. Very clean and obvious where you should be selling. Currently, it's in the buy zone. So even though I'm bearish on fundamentals, I'm bearish on technicals, it is in the buy zone, right? You want to buy during a bear market and sell at the peak of the bull market, right? I don't think it looks bad enough to buy, but it is telling you, yeah, it's a good time to start buying based on the 365 MA. Does that mean it's not going to go to 2 or less? No, it just means based on math and time, this is a pretty good spot. If this holds, if this low holds, or if 550 holds, whatever, it doesn't matter. It's telling you that it likes 56 plus, it likes 60, 70, somewhere in there. Whatever the 5x multiple is or will be at the time when this thing finally turns the corner. And in regards to the single collateral stuff, you can see how this just waterfalls down, way more than any other DeFi asset. DeFi will have issues for various reasons based on liquidity, but this is another degree of liquidations that you're seeing on the chart here, at least in my opinion. On the 5200 EMAs, VPVR, yearly pivots, volume, and RSI, it is still holding a bearish death cross on the daily. It is eking below volume, congestion, support, whatever you want to think of this as. This is not good, right? To me, this looks like it's going to 6. It lost volume support. It has a bearish 5200 cross, and the next pivot down is at 6. I mean, so is the local low. There's no pattern that's going to save this. Volume isn't going to save this, and there's no div. So this is not bullish. The default assumption should be lower lows here. So until you get a bull div, until you get volume capitulation, until you get any activity whatsoever, this thing probably continues to bleed, much like the fundamental stats are. On the cloud, it's been bearish for a couple weeks now. Lots of chop though. Until this is above 12, it's going to stay bearish. So again, the expectation is lower lows here until it's above 12. So this may chop around between 5 and 9 right? But none of that really matters if you're bullish, because if you're bullish, you're waiting for price to get above the cloud, much like it did in late 2020. SNX BTC, also a very large ranging hot mess here. No bull div. The next volume node down is basically 10K sats, the multi-month zone, early 2020. Bearish 5200 cross. There's no pivot that's going to save this. This just I don't know what's going to save this because it doesn't look good, right? I mean, it's downtrending. There's not quite a falling wedge. There just looks like there's a lot of momentum to the downside with very little volume and no bull div. So I like 10K sats as far as support. And SNX ETH did have a multi-month bull div, and that didn't save it. You could probably argue it's still bull diving. I don't really see a pattern here per se. So that's not going to save it. No, there's no reversal pattern. Diamond bottom, falling wedge, inverted head and shoulders. There's none of that stuff. Death cross happened in April. There is a support here at 0025, whatever that is. But after that, it's not much. So SNX as a whole needs to turn the corner pretty quickly here. Regulatory clarity would help. Multi-collateral would help, I think. It's a double-edged sword. If you go multi-collateral, then people don't really need SNX anymore, They just use something else with SNX. We see it on Maker, right? People use 50% of Maker DAI components is USDC. So it helps stability of the stablecoin, but Maker, the coin, is suffering. They never really had Maker as collateral anyway, but that's besides the point. So you need fundamentals to pick up. You need a reason for people to use this thing again, because technicals look abysmal. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, and the trades and the trade stem down below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.